Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 7th of September, 2021. Now, before I get anywhere, tomorrow having a live webinar. We call it the What's Up webinar, and you're invited to come. If you have not filled out your application form, and I sent them if you're in my mailing list. If you didn't get it, look in your junk mail. Otherwise, you can click right up here right now, and that will get you to fill it out, then come back and watch this. That's what I would do if you want to attend. Again, it starts promptly, 12:30. It is over at 12:50. I do not post these recordings. I want you to attend with me. At the end of this, we'll talk about my Labor Day sale that ends tomorrow, so you want to watch that too. Okay. I'm surprised that we were down as much as we were today. You know, the day after the terrible jobs data, the market paid no attention, and bang, everything got hit and hit hard. We've reopened, and you can see you're still down in these markets. They're just not acting well at all. Interest rates climbed. They went back over the 137 level in the 10-year note. Energy's had a good hit today to the downside. Mixture of the U.S. dollar getting as strong as it did, 48 points higher, at the expense of a number of currencies which all got hit. And in the energies, Saudi Arabia lowered its selling price to Asia. So that was important. Grains, rain makes grain. What can I tell you? They got hit. When we look at the stock index, you're down 1/3 of a point for the week so far. Nothing big, no big shake there. But you do have a sort of rolling down pattern here. The pattern has got a higher high and a lower low. That is not a trend. The market is over the 18-day average, so the bias is up. What do I mean by that? I view bias this simplistic way. The bias is up if you're trading over the 18-day average. It's down if it's under it. It's a filter on other studies. Where did the market stall? Right here at the 18-day average. Okay, and what about momentum? As long as this red line does not close under 79, I contend the pros are buying this market. They're doing this. They're biting their finger going, oh, why did today have to happen this way? But that's what I think they're doing. I think they're nibbling their way into these markets. When you take a look at the NASDAQ, you still have a fully embedded reading. So the market today was the one index that acted great. It was up 23 points. It is still acting very strong, and it could easily be headed back up. When they break and they fall apart, you'll know it by the slow stochastics closing under 79. That'll be the end of this wave. Until that happens, what rules the market isn't the price action. It's the momentum that creates. They work hand in hand. In the Dow, you never did embed. You just got overbought and you're breaking back. This is a chart that is caught in these Bollinger Bands. You have a phenomenal sideways action pattern. Will it be a base to work forward from for higher prices into the end of the year, or a short-term top or a longer-term top where the market breaks down? It'll tell us. We don't need me to make a guess. In the Russell, until the red line closes under 79, I contend the pros are buying this market looking for higher prices. The one market that acted terrible today was gold, but I covered that in my other, in the gold review. In the VIX, a good update. You're up 10% today. So when you say, what does he mean? Look at the chart. 10% rise is a big number. You're into resistance, and if you clear this area, are we going to the 200-day? Here's the other part. Did you lose the embedded reading? No. So this rally was likely sold by those that follow the embedded reading, and they'll blow out tomorrow if you get a reading over in this market 21 on the end of the day. If not, they'll look for the pullback, and if it pulls back, probably going to see stock indices climb a bit. In the bonds, if you've taken my enhanced Bollinger Band course, I teach the first time you hit Bollinger Bands, up, down, what do? It's an area you take money off the table. Why shorts? Well, you have had it. Lower highs, lower lows. This market's been acting bearish ever since this occurred. You followed through with the market now today. And as far as I'm concerned, the shorts said so long. Let the next guy carry the risk from here, which makes sense. You only stay out of a Bollinger Band 5% of the time, either below it or above it. And when you have momentum that's oversold, that combination, the way I teach trading, put your money to work somewhere else. 10-year note, not quite oversold. Markets got higher high, lower low, and did not hit the lower band. You're within a hair of it, but you didn't hit it. Hitting it is hitting it. In the dollar index, we're getting this rally in a market that is oversold. Never did embed. Where do I think the resistance is going to come in? Wherever that 18-day average is. Now, if you're looking at that 18-day average, it's dropping 3 to 5 points a day, so it's probably going to be around the 92.70 level when the market opens later tonight. In the eurocurrency, we have been talking that I thought this market was at a key number of resistance, the upper Bollinger Band. My courses teach you never buy a Bollinger Band, over it or on it, ever. You walk away, you take money off the table, and you're getting that pullback in this market right now. It did not embed. The British pound, overbought market, the pulling back to the 18-day average, getting itself set to see what's going to happen next. Boris Johnson proposed a series of tax hikes today, ways to fund them, pension plan money, so on and so forth. I'll probably write about it later in the week. Then we get to the character of the day. Look at this Bitcoin range. 53,001.25 to 43,705. You don't think that's a big range? What did you do in one day? You went from the upper band to the lower band. What do I teach? You won't stay above the top. You won't stay below it for more than 5% of the time. And the market did its job. In Brent, did we get too high on the differential? I don't know. You know, it's a rough one to call right here. When I look at the Brent, I'm bothered now that the market is flirting with losing its embedded reading. I think that the pros, if you take a look at the market, you've been embedded. I think they bought this market today. You ended up with an 84 reading, but when you're reopening tonight, you're flirting with losing that reading. Flirting is not losing it. But do you have to put yourself in harm's way? I'm not convinced. Those that bought the market are probably holding it. It's only down a dime from the close, but you got to be careful. If you lose that reading, you're probably going back to the 70 level, about $1.50 break. WTI crude, did we ever embed? So let's take a look. Both numbers over 80, both over 80 on Friday, both over 80 today. But this market, when it was down, it was losing that reading during the day, and I had warned people about it. I think the market's just going to look for support here at 67.35, right in that zone, and it'll decide if it's going to break further or if it's just going to hold there. I think that you've got the punch out of the market, but I don't see it turning very bearish yet. In heating oil, same thing. You have an embedded reading that is still, I think the pros buying that one. They'll get out, in my opinion, if the market gets a close on the slow stochastic under 79. Natural gas, I'm looking for a break in this market to ideally buy from. I just think natural gas is going to be a surprise this year to the upside, not because I think it. I'm looking at the weekly charts, the dailies. It is trying here. You can't count Wednesday. So Tuesday, both numbers over 80, both over 80 on Friday, and Thursday not. So you need to have a strong day today if you're going to embed. The third day is what I teach you, do nothing. You wait to see if it does it or doesn't do it. Now, you've already seen one icon to join if you want our webinar tomorrow. Now another one's going to come up here for you. And on this one, if you want to take advantage of my Labor Day sale, it's so simple to do. How do you go about doing this? Well, let me just explain it. I love that background, don't you? Here's what it is. You buy 1 year to any of my products, 1 year research to them, and you get free your choice of my full charting course or my enhanced Bollinger Band course. Your choice. big values in them, and you get a big discount on the 1-year package because it's a lot cheaper than going month to month. So you choose. Do you want full research? Do you want a year of the SPDR ETF? Do you want the combo where you get the SPDR ETF and the futures tied? The plan starts at just $156 for the year. The course alone, $249.95. Enhanced Bollinger Band is $75 if you buy it right now. You don't go here. Listen to me. Click up here to take advantage of it. We created a special page. It'll do everything you want. You just let us know when you want those courses to begin. We'll get you all set up like that. I hope to see you all tomorrow at the live webinar. Take care.